Business owners, employees, investors, non-doms, and anyone else that wants to watch, here are all the key changes that you need to know from the autumn budget in 2024 that are going to affect you both now and also in the upcoming tax year 2025-26, which starts on the 6th of April 2025. As one tax year ends and another starts, there's always changes that you need to consider when you're looking at your tax strategy or just the year ahead for your business. But with the Labour government now in effect, there is going to be drastically higher changes coming for years to come, and notably more from the autumn budget in 2024. So this video is a must listen. You need to absorb everything, consider everything that we're going to discuss, and make sure you action it. The first change, and the one that arguably had the most nervousness when budget was coming out in October of 2024, is capital gains. Now, a lot of people were expecting this huge hike. There was a lot of information in the news that it was going to double, triple, quadruple, even further than that, and a lot of people were getting nervous. Some people actually made the move to go overseas, started selling assets in advance of the expectation of what this was going to go up to. Now, the reality was, even though it was still a sharp increase, it wasn't as much as expected. The rates of 10% and 20%, which was basic rate and an outside basic rate, have now increased to 18% and 24%. And that's on the sale of anything but a residential property and carried interest. So that's sale of any assets that you purchased, a sale of a business. That would essentially be the rate that you would pay on the gain that you get, which is the difference usually between the purchase price and the sale price. Simply put, there's obviously other considerations, but this is the main notable change from the budget. 18%, 24%. So anything that you calculate in terms of a tax liability on the sale of an asset, you would need to run through that example. So let's say I was going to sell a business for £1 million, which I started from the ground up, so no purchase price. Let's say that I don't qualify for business asset disposal relief, which I'll be getting into later in the video. I'm going to pay 18% on the first £50,270, assuming I've got no other income at all, which is obviously going to be rare. So deduct any income that you've already had. Then the remainder of the gain that's left would be taxed at 24%, which is at the higher rate outside of your basic rate band. So make sure you recalculate any liabilities from any expected asset sales and consider these rates increasing. It's worth noting that the rates on residential property that you'll pay for capital gains remain unchanged in the upcoming tax year. The second change is the rate of capital gains tax that's payable when claiming for business asset disposal relief, formerly known as entrepreneurs relief. Now, this is a relief that was supposed to incentivize entrepreneurs to build and sell, build great businesses that have large enterprise value and then sell them at a point in the future, and you get a lower tax rate for that. Now, the lifetime limit for this has been chipped away over the years, and for me this was quite a disappointing change to see. It's no longer going to be 10%, it's now going to be 14% from April 2025, and that's on the first million essentially of your sale, and that's a lifetime allowance. So you can't do this for multiple different businesses, it's just the one time that you can use this, and your £1 million is the total. Now, if you was to sell a business for, let's say, £2 million, and let's assume that there's no other rates available, you're going to sell the business for 2 million, and you're going to have £1 million of it that's payable at 14% from April 25. Then anything after that, assuming that you're going to be outside of basic rate, so not at the 18% previously mentioned in change 1, is then going to be 24%. So you're saving 10% essentially on that first million. However, it's a shame to see this rise, one that I wish the government would keep, and if anything increase, to incentivize entrepreneurs to build great things. Just to also note, the government did announce in the budget that this would increase to 18% in April 2026. Again, disappointing. The third change that every business owner needs to know about, and has probably had the most publicity and caused the most amount of concern, is the increase in the rate of employees' national insurance. It used to be 13.8%, it's now increasing to 15% as of April 25, and also, even more notably so, the threshold of which you actually start paying employees' national insurance has reduced from 9,100 to 5,000, meaning that, let's say you've got 10 employees on the books and you're paying them above the 9,100 threshold as of last year, and every single one of them is now going to have a reduced threshold to 5,000. That's an additional £4,100 in earnings that you're now paying 15% over to HMRC off. And then anything above the 9,100, you're now paying an extra 1.2%. This is a really detrimenting effect to people's P&Ls, people's businesses, especially in hospitality, especially in retail and businesses where you've got a vast amount of employees. Alongside national minimum wage and other changes, this is one that you definitely need to be aware of and make sure you're budgeting for. The fourth change is the one that comes every year. It's the changes to national minimum wage. Now, for business owners, again, this is something they need to budget for. It's something that's going to affect the P&L, but it is needed in line with rising living costs. Alongside the employer's NI increase, it is a tough pill to swallow, but I'm going to go through the rates with you now. So for anyone who's an apprentice, from £6.40, which was April 24 rates, up to £7.55. From anyone under 18, it was £6.40, again going up to £7.55. Anyone who's 18 to 20 is £8.60 in previous year's rates, going up to £10. And anyone 21 and over is £11.44, going up to £12.21. So if you look at all of your employees collectively and make sure you budget what the increases will be in both the change I've just mentioned for employers NI and the change for actual national minimum wage increases, to make sure you budgeted for what that increase is going to be, to make sure you can cost cut in other areas or look to increase revenue. Change number 5. I've talked a lot about the negatives. This is one of the positives that HMRC have put forward to help the smaller businesses with the 2 prior changes I've just mentioned. And that's the increase in employer's allowance, which simply put is a credit that you get against any employer's NI that you need to pay on the employees that you employ. And it's going up from £5,000 to £10,500 from April 25, meaning the first £10,500 of employees NI that you would usually pay over to HMRC, you do not have to pay, you get that credited off. They've also removed the cap of £100,000 in total NI for a business, so every employer is now eligible. And change number 6, there's been significant updates to the UK taxation of non-UK domiciled individuals from April 2025. The changes are as follows. Just to summarise, a non-dom is someone who has domicile or their permanent home outside of the UK. And that essentially means that their origin is outside of the UK for tax purposes, usually because they were born in another country or their father is in another country, meaning their domicile isn't in the UK. So when you then become a UK tax resident, you may still be non-UK domiciled. So you need to consider all of this when planning. If you're an expat or you're someone who's moving into the UK but has businesses outside or has net worth and assets outside of the UK, this is very important. The current remittance basis of taxation will be abolished for income and gains arising after the 6th of April 2025. This is now going to be replaced by a new residence-based regime. The new regime will provide 100% relief on eligible foreign income and gains, known as FIG, arising to qualifying individuals in the first 4 years of tax residence, noting this is really important that such individuals must have been non-UK tax resident for at least 10 consecutive years prior to their arrival in the UK in order to qualify for this relief. Current resident non-dom remittance basis users who are not entitled to the new 4-year FIG regime will pay tax at the same rate as other UK resident individuals on a newly arising FIG. It's also worth noting that there's a new temporary repatriation facility, again known as TRF, will also be available for individuals who have previously claimed the remittance basis and have untaxed foreign income and gains. Such individuals will be able to make an election to designate amounts derived from previously untaxed and unremitted FIG that arose prior to the 6th of April 2025 for a period of 3 tax years. From the 6th of April 2025, with the designated amounts charged to tax at a rate of 12% in tax years 2025 to 26 and 2026 to 27, rising to 15% in tax year 2027 to 28. Any remitted designated amount will not otherwise be charged to UK tax. So this is essentially an alternate route for people who have previously untaxed foreign income and gains that have amassed net worth overseas, that then want to potentially bring that net worth to the UK and be able to then buy houses, invest in UK companies, or whatever it may be, to pay a flat rate percentage on that, or the 12% or the 15% rising in the 27-28 tax year. When an individual ceases to qualify for the new regime, i.e. after the initial 4 years of being UK tax resident, such individuals will be required to pay UK tax now on their worldwide income and gains on an arising basis, as is the case for any other UK residents. UK taxation of non-dom is a very complex topic. Please do not purely listen to my YouTube video in order to tax plan around this. Make sure you go and get specific advice on this, but here are all the key changes you need to know. The prior 6 changes are the detailed, in-depth ones that you really need to consider coming into the new tax year, and some of them that are already in place now. However, I'm going to quick fire a few other considerations that you need to know. Effective from the 31st of October 2024, there's going to be an increased charge on second homes for stamp duty land tax, going from 2% to 5%. Capital gains tax rates will be increasing to 32% on carried interest, with further increases expected in April 26 and beyond. Business rates relief will be removed from private schools from April 2025. And as of the 1st of January 2025, there's also now VAT on private schools fees. There's also no extension on the freeze of income tax thresholds and NI tax thresholds, still expected to not increase until 28-29. There was also significant changes with inheritance tax, with the threshold being frozen until 2030, as well as inherited pensions seeing change. So again, crucial tax planning is going to be needed on that when you're looking at estate values. There was also changes to business property relief, as well as agricultural property relief. So again, you need to make sure you look at this in detail to see if you're affected. And one key thing to know, which is, I suppose, a good thing, is corporation tax is going to remain the same. The 25% isn't going to be reducing, but it isn't going to be increasing. There's no expected changes to this. This isn't an exhaustive list of all the changes, but this is a brief overview of everything that I think is going to affect you as a business owner, investor, employee, or whatever you currently do.